Okay, good morning, everyone. We're going to get right into the charts, technical analysis of the markets. I'm just going to go through the general indices. We'll look at some individual trade ideas, and we'll wrap up. I know I was having microphone issues yesterday, so let me know if I fix those. I think I tweaked the gain or something on the mic. Anyways, all right. Give me a thumbs up, guys. I do appreciate that. Here we go. Triple Qs. All right. Couple levels to watch right now. The main thing that you want to focus on is the zone that we're trading in right here. That's kind of the most important thing to pay attention to. We're back down near the bottom of the zone, which is about 314, and we're kind of dipping below the low. The recent low was about 310.87. So if you take out that low, I think I do think we're going to take out the low. But if you take out the low, then I think it's going to be a move pretty much down to this 300 area. It's about 290. I've got it marked out at about 298.50, but it's right in that area. And so break of the low that happened just recently at that 310 area, then and it's about the low is about 310. 311, somewhere right in there. A break of that, I think we head straight down. Why do I think we're going to break and go down? And this is what I'm positioned for. I am positioned short, pretty heavily short in a lot of different individual stocks and the triple Qs. But I believe we're heading down to that 310 area or that 300 area because of the bearish rising wedge. See it right there. And we broke to the downside of the bearish rising wedge. And that bearish rising wedge came with negative divergence on the daily chart. See the negative divergence in the RSI and the PPO. So kept making higher and higher prices while momentum kept dropping off and making lower, trending lower. All right, so that's divergence, and that signals that we're likely to head lower. So this move down so far, we broke. We got the sell signal right there. We broke. We've been consolidating and kind of bouncing around. The last few days, it's just been moving. You can see we moved to the top of the range, which is about 324. And then we moved to the bottom of the range. We moved back up to the top. We moved back down to the bottom. So we're just bouncing around. Again, a lot of people probably the other day when the market was just ripping higher up 600 points probably thought, oh, great, that's it. The bottom's in. Today, they're questioning that because we're back at the bottom of the range. Now we haven't broken the bottom support, so we want to see that. But if that comes, I believe there's going to be a move down to that 300. All right, so from where we're at on the Qs as of right now, that would be another 5%. And from the all-time highs, that would be a total of about 12%. All right, so the market will start thinking that that's the, that might be it. Maybe that's the end of this move down. I'm not so sure. I think there's actually probably some more downside. But the way I play it is as we drop down to the next level of support, I'll cover, take some profit. You could even probably flip long if you were a short-term trader and you wanted to get a bounce. But cover and then wait for another break of that level. If you get the break of that level, then you're likely heading a lot lower. So as a swing trader, you can just ride it out. But again, this 300 is much better support. Why is it better support? Well, you can see back here, we held that as resistance here. It was resistance here. Then when we finally broke above, right back here, we held that as support. So we have, and also this, we overshot it, but basically you see this big breakdown candle right there. That was basically at that 300 level too. So we have 4 reactions along this level. Big reactions as well. So I think that is going to prove to be, a more major level of support. That's all I want to say about that. SPY starting to roll over. Expect SPY to start to roll down if Qs starts to roll down. And SPY will likely head down to this 362 area. Right in here, I see it. It could be, could be slightly higher. Maybe it's up here at this 364, but we'll say 364 down to 362. I expect SPY to probably head down to that area if the Qs continues to roll over. So something to watch there. On the upper end of SPY, We just have this blue trend line, which has proven to be resistant so far. So we're not able to break above that yet and hold above that. So a break above that and a hold above that, something that looks pretty convincing, maybe a few days where we're really starting to break above, then we might be in store for what could be a big melt up top of the market. But until we see that, I think we're going lower. And we don't see that in the RSI or the PPO. You can see here negative divergence here on the PPO on the daily chart, as well as the RSI and the PPO. You have negative divergence. So all this grinding higher price action was divergent highs, signaling that it's going to fail. And that's what I'm looking for, is prices to roll over and sell off. And you can see if we roll down to this 360, this support area that I talked about, we're going to wipe out all the gains for the year. And obviously there's potential to go a lot lower. Here's small caps. Still haven't broken support. So we got this uptrend line right here coming off November. We got a tag here, and some reactions right here. There's no sell signal. We have not broken down yet. So on this, I would expect it to break if the large caps break lower and start to head down, like Q's going down to that 300. I think IWM is going to break as well. So possible trade idea there. If it breaks, you get that sell signal. What's a sell signal look like? Well, it's not a close. You don't want to see it close just like right here on the daily. You want to see a nice impulsive red candle and a close down below that trend line. That is your sell signal. So if you get that, then that would be a break of support, and then there's likely much lower prices to come. If we break that, I suspect we go right down to this 194 to 195, depending on when we get there, this area right in here. All right, that has trendline support coming off the March 2020 lows, had a reaction there, and so that should act as support. It also has some horizontal support right here. So I suspect this area would prove to be the next level of support if you get that impulsive breakdown. Okay, TLT selling off again today. Rates are creeping back up towards that 1.5% on the 10-year. That's the level that the market doesn't like. It seems the market, we got a reaction when the rates creeped over that 1.5%. We got a spike in rates and the market kind of freaked out. So that's the level you want to watch. To watch that, I just use TNX. All right, TNX is your 10-year Treasury yield, and that right now is sitting at 1.48. So that's your 10-year Treasury yield. That's interest rates on the 10-year, and so higher than 1.5, I think the market continues to struggle and have problems. If there's a spike in interest rates, which I think that's what we're going to get, I think we're going to get some more upside in interest rates, and the market's going to continue to freak out, especially tech. Right now, and I've been hearing it across a couple pretty smart guys on YouTube talking about this kind of a long commodity short tech trade, and that's really, if you look at what I'm positioned in, that's exactly how I'm positioned as well. So I'm very short Qs and a lot of these tech names like Peloton, things like that. But then and then I'm long gold miners. So anyways, TLT, you can see the thing why I think TLT is actually going to go lower is because we have no divergence we just have downward trend here in the PPO, downward trend in the RSI, and downward price action. So if TLT drops lower, below, I think we're going to get another spike down. Maybe we'll put in that bullish divergence in TLT, but as of right now, I just see downward trend, downward price action. I see no change. A lot of people thought this was the bottom, but I think we're going to get some more spiking down action. Maybe it is near the bottom of where TLT is going to sell off, but I think we're going to spike down, freak the market out. Very possible the Fed comes out and does some sort of yield curve control. We'll be listening and waiting for that. If that happens, if the Fed does yield curve control, tech's likely going to rally on that news, and gold miners will likely rally pretty strongly as well. So in that event, I'm very likely going to cover my tech shorts and probably add to my gold mining longs. But that's all fundamental kind of stuff, so we'll get back into the charts. Gold. Here's gold bullion, still hanging in there. So the thing is that each one of these days, the last few days, they've kind of spiked it down, and the buyers have kind of stepped in and bought it up, and it's just kind of hanging out in this area the last few days. So this area is the trend line coming off May 2019. We had a reaction. So there's your COVID drop. It fell right to there. Now this was not a trend line when you got the COVID drop. There was no valid trend line. So we didn't know this trend line potentially existed. But now I've got it marked out. So I have 2 reactions, and if we bounce here, then this will be a 3rd reaction. So again, I don't trust this trend line. All right, I'm not saying this is the trend line that it should hold on, but one of the reasons why I like it as a potential area of support, I need a little more proof, of course, but I like it as an area of support, is this low right here is lower than the former low right there, and the RSI and the PPO, you'll see here, was an equal low. There's your low there, and you have an equal low. We haven't broken that to a new lower low. So this is a bullish divergence. It's an equal low with a lower low in price. That's bullish divergence. So that's why I like this area, because this is where we've got bullish divergence. Now we can burn through it. If we keep going down, we're going to burn through that bullish divergence. That's going to foil really this setup as support. So something to keep an eye on. And that's trading, right? You take a position near support or where, a key level, and then if you're wrong, you can go ahead and stop out, and you're wrong small, lose small, win big. That's kind of the name of the game. I haven't talked about the dollar for a while. Here's the DXY. The thing is, the dollar's just kind of range bound. We had bullish divergence down here. I've got it circled. See how the momentum was moving higher. So this was bullish divergence. We got the breakout and we moved all the way up to 91.5, but now we've just kind of become range bound with it, 91 proving to be resistance and about 90 proving to be support. So until we get outside of that range, there's nothing to talk about. A move up to 92 should continue to kind of freak the market out, probably freak gold out a little bit, and then a move back below 90, gold will probably start to benefit, and we'll see, if it's substantial, what's going to happen. So again, that's the range. So you'll see XLF moving higher today as well. So we'll see how this goes. But XLF is obviously, the financials are pricing in continued rise in interest rates. And so that's what the financials are pricing in. I don't have a trade on financials. I don't see anything right now. There's nothing in the charts telling me that we're going to get a reversal or anything like that. As of right now, I just see kind of upward price, upward momentum. So something to look at. I mean, there is some negative divergence that's starting to show up. If you're interested in shorting the financials, I'm just not really interested in shorting them, but maybe some sort of a break of this trend line. It's not the cleanest trend line. And then we could come back down to this $29, $30 area. But I just don't see anything super compelling on these yet. Okay, quick run through of Apple, or we'll just run through these fangs real quick. But Apple, all right, back below. Here's resistance. It's about 125.40. We're back below it. We had a breakout above it, but that failed. So failed breakout, looked like a whipsaw. I think we're going lower in Apple. We're probably heading down to this 118.50, and a break below that. Sorry, my lines are trying to update. A break below that, and I believe we're heading down to about 106. So I think Apple's heading down that way. That's what it looks like to me. Microsoft. All right, the main level to watch on Microsoft, and I think we'll start to get more impulsive selling in tech when Microsoft cracks, if it cracks, but this 227.75 area, a break of that, and we've got a false breakout. So here's the thing. You got this big sideways trading range going all the way back to July. We traded sideways, broke out, everything looked bullish, everything looked great, but now we're coming back in, we're back testing. So that's all this is as of right now. It's a back test. There's no, there's no breakdowns yet. Still bullish. If you're bullish, Microsoft, you buy at support right here, and go long. And if it breaks down, you cover, or you sell, get out of your long position. However, if we break below that 227.75, this was a false breakout, or aka bull trap. And I think if that happens, we get a swift move down to 199, basically the bottom of the range. So something to look at, and probably lower, to be honest, because false breakouts are usually you sell off pretty quickly if you get a false breakout. So something to look at there, and that's a level to watch. Amazon's just still treading water. It's not doing anything. Here's earnings right here. I think earnings was this day, and it's just sold off since earnings, or maybe earnings was right here, but it's basically maybe it gapped up and sold off. It's just been selling since earnings came out, and you look, it's just going nowhere. So still valid as that this is a potential topping pattern in what looks like a big, long, extended bull market in Amazon. And if we break this level here at about 2928, then I think we're heading straight down to this major trend line, which is about, right now it's about 2,300 or something. It depends on when we get there. Google still treading water up here. It gapped up on earnings. It hasn't broken down. It's just kind of floating up here. What I'm looking for, if the rest of the things start selling off, we're likely going to get a gap down right to about this level, 1972, and then it'll sell off, and that'll create an island cluster top, island reversal top. But until you see that, Google's it's just kind of sideways. It's not going up, not going down. So we got to wait for something on that one. All right, this KHC, I like this one, and I'm bullish this one. I'm not in it because I can't find a good entry, but perhaps this trend line right down here at 34.52. I was hoping to get it down at $25 because what I saw was a potential inverse head and shoulders. You can see you got your shoulder, you got your head, and I was looking for a drop back down to that 25 as another shoulder, as a spot to buy it. But so far we didn't get that. And what we've done on this one is, here's a big gap from all the way back here in 2019. This was a huge gap. I think they had some bad accounting or something going on. 25% drop. And the gap is right at 35.96. So as I zoom in, you can see here's the breakout into that gap. Nice confirmation of breakout. Come back in for a back test and starting to bounce. So I think we're going to gap fill on this one. That's what it looks like. And a gap fill would be a run all the way back up to that 40. It's about $48. So in general, that looks good for a potential long trade as a 27% gainer. Something to keep an eye on, I guess. And especially if you get a pullback to this trend line, that might be an objective area to buy it. It is objective at this gap entry right here at 36 as well. So you get a pullback to 36, maybe a slight undercut. That might be an area to look at. Just something to look at. I don't see negative divergence. I see bullish momentum. You can see momentum's just clearly moving up and price is moving up. So that's what I see in that one. Everybody asks me, a lot of people have asked me what I think about energy right now. Okay, so longer term, I like energy because it's a commodity, and I'm bullish the commodities. I've been bullish the commodities, talking about the ag commodities and the oil. I mean, I was bullish back here. I had it circled. I pointed it out. This is when nobody wanted oil. Everybody thought oil's dead. It's a horrible thing. The new administration's going to crush it. But that's not what the chart told me. The chart said it looked good. It was bullish. It was going to rip. And, XLE from that area that I was buying it basically is up 76%. So, again, I put out a video back here saying, this sector looked really good. And sure enough, that played out. At this level, at these levels, I think there's probably a pullback in oil. I would be looking to buy pullbacks in oil, but I'm not talking about just a 5% pullback. I think we could probably pull back down to this, 37 area in XLE, which would potentially, that would be a drop from where we're at now of about 25%. That might be a area that I'll be looking to go long oil again. So near term, I'm bearish, but I'm not short oil because I don't see, you know, it's relatively strong. I don't see any sell signals yet. We do have some negative divergences starting to show up in XLE, and we've got this little trend line that seems to be walking up. So you could watch for a sell signal. And, you know, if you get the sell signal, that might be an opportunity to short oil. But the thing is that because I'm bullish oil, I'd rather just not short this. I'd rather short something that's just gone crazy, like tech, that I think is way ahead of itself. Oil is not way ahead of itself. I mean, you can see the, you know, oil's been, if you roll out, oil's been in a bear market since 2014. So I don't really necessarily want to short something that's been in a bear market for many years. I'm more interested in shorting something that's been in a raging bull market and has gotten way ahead of itself, like tech. So ideally, what I'd probably be looking to do is let this thing just come in a little bit and then probably start to go long. Here's tan, looking good. Still more downside. Looks like it's priced into the chart. So nice clean uptrend right here on the daily. Broke trend. This was your clean sell signal right here. But we broke trend. We've been consolidating, bouncing around, heading straight down to the bottom of the range. You know, we could probably move this. You know, I think this is the bottom of the range, about 97.70. So we're slightly underneath it, but not impulsively breaking yet. Look for this selling to impulsively break this 97.70 area. And if we do that, I think we're heading straight down to 78. Likely we'll get a reaction there. That's much more major support down in that area. And that would be a drop from where we're at of another, about 20%, 19%. And from the highs, that would be a drop of almost 50%. So that looks good. I think we probably get a bounce there. And yeah, that's what I see in that one. Look at Walmart. All right, so Walmart's breaking down today. And I've talked about Walmart for a while, saying I think this thing's going to 80. And this trend line comes off of 2015. So you've got this big bearish rising wedge. You've got this big bearish rising wedge in Walmart on the daily chart. We broke to the upside, looked all good, but now we're coming back in, and you can't say this is a complete breakdown because the day's not over. But if we get the daily close, especially if there's more impulsive selling, then all this price action was a false breakout. And we're likely in that scenario going to head straight down to the bottom of the trend line or this bearish rising wedge, probably get a bounce there. But ultimately, when it's all said and done, because of this larger pattern and the false breakout, I think we're heading straight down to about 86 to 91, somewhere right in there. So I think Walmart is, going to go into a bear market. That's what this looks like to me. And from there, that would be a drop of a 30% to 33%. And from the highs, that would be a drop of about 43%. All right, so that's what I've got there on Walmart. There's always the opportunity to go a lot lower as well, but that's kind of what I'm seeing in Walmart. Okay, so let's look at DraftKings. I had a subscriber comment. They like to troll me, comment that DraftKings isn't working out. Well, I mean, here's the thing about DraftKings, all right? If I go to my hourly chart, I covered half my DraftKings short right here at this trend line. When we dipped below and I saw that it started to recover, I covered half my short. I kept half, but I covered half. So I take profit as we start to hit support levels. As short trades start to work out and they fall down to support, I start to take profit. Just like you should be doing, when you're long, but especially when you're shorting, you have to take profit along the way because the market wants to go up because the market's priced in dollars and the dollar continues to lose value over time. But doesn't mean that the market can't just completely come down. But I think it's important to take some profit along the way. So I took half my short off here. Now it's bounced against me. So that other half is down quite a bit. But again, what do we have going on in the chart that tells me that this is a false breakout? Here's negative divergence. This high right here is just another divergent high. You can see it right here, making lower lows in the momentum. I think that it's very likely that this breakout here is going to fail. And when it does, I think we head straight down to 45.13. So what I'll be doing is probably adding back that other half that I took off on a break back below this 64.88 level and get that close below there. Then I'll probably add it back, and I think we're heading straight down to that level. The other point that I want to make is DraftKings, is one of the trades I talked about, and that one's, as of right now, not working out. But if you look at all the other trades, let's see, Nike, I've talked about that. That's breaking down. Redfin, I just got short this one recently, and that one's breaking down 5%. We're breaking support. We got a sell signal. Here's another sell signal today. Here's a trend line support. We're breaking it. Redfin looks like it's heading straight down to $60. So that's working out. That's profitable. Chewy, I was started to short this one, but I just went with Redfin. I've got to be able to keep an eye. I've got a lot of trades to manage. So, but this one's down. It looks like it's heading straight down. I've pointed this one out in the past. Etsy. So Etsy, they ripped it higher on earnings and gave it all right back, plus more. So here's the move up on earnings. Everybody felt great, and then boom, just sold it right back down. So this one's not quite profitable from where I've entered, but it looks good. It looks constructive, and I think we're going to break down. So we're at support here at 214. You've got an uptrend line right there, negative divergence. See it right there. And we're at support, but I think that support gives way, and we're heading straight down to 166.70 or so. Peloton, I pointed this one out. This one's working and very profitable. I did cover it the other day. I got back into it because here's the thing. We got a little bounce. I saw that bounce started to give up, started to roll over. I got short this thing again because this chart is trending down. So I think we're going much lower. And was able to actually get a better position as well, because when I covered here at support at 118, it bounced a little bit right up to resistance. Let's see if I can mark that out. We got that right there. Bounced right up to resistance and then started to fail. So heading lower, this thing's down almost 7%. Looks like we're going down to this, about $100 range, 98, 90 to 100. From the entry on this one, which is, I talked about it right here. This thing's down 30%, all right? So, that one's working. Let's see what else I pointed out that seems to be working. Carvana's not quite working. This one's just kind of still hasn't got the memo that the tech's starting to sell off. Okay, so, Carvana is still wedging higher, but I think it's going to break. We have bearish rising wedge right up here and big negative divergence. This has just been extending and extending and extending. So likely we're going to see an impulsive break in Carvana when the rest of these start to break. Qualcomm, I am not short this one. I was short. I got short right up here, and obviously that played out nicely for a breakdown. From the short, it was a total of about 17%. The reason why I'm not to short this is you got this big gap now. We're starting to head down to the gap. We're going to get into the area where the dip buyers are going to be, eyeballing this thing to buy it higher. So whether they buy it up, I think there's some better shorts at this point. I liked Qualcomm short up here. That was a great short, but now it's already dropped roughly 20%. So that was a winner. Let's look at Zillow Group. This one looks good. Profitable now on this one. And you can see negative divergence right there. Big negative divergence. That's really just been extending. We had this upward price support line. We broke, back tested a couple times, created a secondary support line, and then we broke that. So the breakdown of that, and now to me it looks like we're going to start trending down. Here's some impulsive selling coming in. We're at support now, which is 157 basically right now. So we'll see if we break today or this week, but I think a break of that, we head straight down to 132. It's about 133. And I do think that's very probable that we hit down to 133. That would be a move of another 15% or so. From there, we'll probably get a bounce, and then we'll have to see. But I think it's likely we're going to go lower, potentially down to this area, which is about 113. So things to watch there. NEO. Again, I pointed out NEO uptrend line here. We broke, so there's your sell signal on NEO. And we are continuing to trend down. So NEO's about flat today. So, it sold off pretty good. Yeah, it was down 13% yesterday. But you can see there's no strength, all right? Even if, any kind of non-selling day like today, and we're just flat. So it's I think we're continuing down to $40. Probably get a bounce or reaction there. But I think if we break 40, NEO has the potential to drop all the way down to 22, and I think that's probable. Tesla, consolidating a little bit. To me, it looks like Tesla's bear flagging. You've got the flagpole here. You've got what looks like a flag right in about here, and then the measured target would be something like that. So I think Tesla, from my perspective, I think Tesla's heading down to this trend line right here. You can see this trend line, which is down here at about 550 or 550, 560, somewhere in there. I think that's very likely that we head down there in Tesla. Okay, the trade desk pointed this one out. Here's what I liked about this one is you have this bearish rising wedge coming off the March 2020 lows, and you went to the upper end of the wedge. So again, when you get outside of these bearish patterns to the upside, they usually fail. They run up here, they kind of whip people out, get everybody extremely bullish, and then they fail. And you can see big impulsive breakdown. Once you fail, you're very likely going to break the lower trend line, and we did right there. We broke, started to back test, and now we're starting to see that breakdown, that actual downtrend. Today, here's support, which is right here at 738.43. We're just slightly under that. We'll see how the day closes, and we might even run down to fill this gap. This is major support, more major support, because you got a big clean gap right down here at about 664.50. So from where we're at, that is a drop of another 8%. Before we hit major support. Big bearish divergence or negative divergence right there. You can see that just continued to build. All this price action is divergent high. This was all a divergent high. So I think we're heading lower in this one. Likely get a bounce at this gap because, traders love gaps. And then we'll see. But a break of this gap, and the 200-day is starting to creep up too. So we're probably heading down to that 200-day. And then we'll see where this goes. But I think it's very likely we're going to go lower. But as of right now, we're still breaking down and heading lower. Okay, long video, but I just wanted to kind of go through a lot of these charts. And I'll go through some of the comments and look at some subscriber picks and probably put out another video today just covering those specific stocks. Thanks, guys. Appreciate it.